Okay, I want to go back to the topic of immigration because when I listened to our old episode, you did bring it up, and I guess I didn't really go there with you or go deep with you. And maybe it's because it is a hot button issue. Do you think I want to hear more on your thesis there around it? It is an economics story. Do you think it's one of these stories that doesn't get talked about quite enough? I'm thinking purely from like more of the what it means for the economy side of things because it is such a hot button issue. Just curious, like,
Well, I
yeah.
think I think a couple of things. Like it took it, we didn't know it didn't dawn on us immediately, and
Mhm.
I think we've always known that since Biden got in, that there were things going down at the border that were nefarious and strange, and the mainstream media locked down any reporting on it, so it was difficult to get information. So you had to go to the alternative media, and then we started doing our own research, and we looked at so in our report of the actual numbers. The official numbers are 10 million border encounters over the last 4 years, with 23 and 24 being some big ones. That's just border encounters. That's you know actually contact. Being people slip through without contact. So we say 10 to 15 million. It could be more. Um, and you know, in the back of your mind, it wasn't all over the mainstream media. Mainstream economists probably weren't thinking about it. So it kind of, for like a year or two, it went under the radar. But that amount of people, so legal net migration is normally a million a year. So we had 10 to 15x that in 4 years. That is just a game changer economically, and we're going to find out, and I believe, and it's starting to come out already, that this was not just they came over the border and they had no money and they figured out how to make ends meet. This was a very purposeful plan done by the government. You can call it the deep state, the bureaucratic state, the administrative state. It was a policy that required billions and billions of dollars. And a large part of our deficit spending, we'll come to find out, was doled out to these illegal immigrants in different ways. Sometimes direct benefits, sometimes NGOs getting money to get them in here and putting them up in housing. So this is a big new economic variable that I think is the elephant in the room.
Mhm. Did it translate to like an increase like in the velocity of money? Were there other
Yes, the
signposts?
velocity of money took off under the Biden administration. It had been trending down for decades, and it took off. So when you give money to someone who spends it immediately, that increases the velocity of money, and that is going to go the other way.
Mm.
Absolutely the other way. And if you look at, since Trump's gotten in there, border encounters have dropped. There's all over X. There are charts of border encounters. They plummeted. So this is the second derivative thing going on here. You don't even need to deport anybody. It's the flow has stopped, and like I said, new tenant rents have plunged. Now that is a very volatile economic variable. It may bounce back up, but it was such a big move. We think it's early signs of our thesis starting to play out.
That is interesting because that ties into inflation. Okay, I'm going to kind of pivot though just a bit here because a lot of it's interesting because I feel like you're kind of highlighting narratives that aren't being shared, right? Like you're not seeing in like the mainstream per se. Well, you're not seeing them there. So I'm just thinking out loud. This is my terrible segue into it. But one of the other narratives that you see in the mainstream around inflation is around tariffs. Do you have a different take on tariffs? And are folks getting that narrative wrong? Because it sounds like we're going to see a different story when it comes to inflation.
Yeah, tariffs are a negotiating tool. If you remember back in 2016 through 2020, there were a couple spats with tariffs used as a cudgel, and they affected the stock market for a day or two, and then the stock markets would always bounce back. It was called the Trump effect. Day traders hated him because they'd have trades on. He'd say something and they'd be blown out of their position. But these are day traders, people who actually, are investors, don't care about short-term noise. And let's just look at the most recent experience. He came
Yes.
out with these like 25% tariffs, and within 24 hours, he started to back off on them because he got concessions. So it's the art of the deal. Trump uses it as a negotiating tool, a cudgel. And quite honestly, because of the size of the trade deficit right now, we have all the negotiating power because we're net importers, and he wants to fix that. So I don't think that, and again, whatever tariffs are implemented that actually stick because someone doesn't budge on the other side of the sea or the table, it's going to be dwarfed by what's coming from all the government juice that we saw the last 2 years reversing out. It'll overwhelm any tariffs. Are small. We won't even be talking about tariffs in a couple of months if our
Yeah.
thesis is correct. It's just kind of a side issue.
Yeah, Dr. Art Laffer said the same thing a few months ago. He said it's a negotiation tactic, like you point out, art of the deal, if you will. Um, okay, you mentioned also at the top of the conversation, you said, okay, a lot of the juicing that we've seen in the economy. You mentioned fiscal dominance. This is a topic that has come up on this show. We had Dr. Charles Calamiris. He had that paper with the St. Louis Fed. It was over a year ago now. Lynn Alden has talked about this topic. Luke Groman. I want to hear more on the fiscal dominance. And do you think, are we going to get out of that?
Well, we have to, because unless we do, the government is very inefficient at allocating capital, and they're sucking up when you have fiscal dominance, you crowd out private investment. And so what the trick for Trump is to get us out of fiscal dominance, get the economy going again so that the private sector starts to build and invest, confidence rises, money velocity doesn't crater anymore because there's deregulation and tax relief. So that's kind of the trick. There's going to be that, and so it's a delicate balance. That's why if Kamala Harris had gotten in there, we'd be extremely bearish. We're just saying it could be a deep world recession, but we're not in our report. We don't call for it to go systemic. So it could, and if it does, we'll talk about it then. But so this is kind of a normal recession. We're due for one, and it's not necessarily a bad thing. And yeah, so that's basically it.
Do you think it's people are fearful of recessions because they have like a bit of that recency bias? Like, I don't know. I just think back to like '08. I remember that when that happened. Like, I remember exactly where I was like when Lehman failed. I was in college, but how crazy is that? Like, I still remember that felt like a big deal, or at least the impact of it felt a big deal, like to adults, for example, and then going into the job market after college. But is that why people are fearful, because they remember the most recent?
Well, white collar workers are fearful because they remember the great financial crisis, because a lot of that affected white collar more so than the average Joe. Because I remember being in the midst of the great financial crisis in Disneyland with my kids and my now ex-wife, and the average person had no idea what was going on nor cared. The biggest fear for anybody in a recession is, especially if you're middle class and don't have a lot of assets, is losing your job. And what's going on right now is the great financial crisis for the bureaucratic state. I mean, people are losing their jobs. I think this is a great financial crisis for people who haven't been productive members of the economy. And they're getting buyout deals. I mean, they're going to get 8 months severance or whatever it is. And so that's that they're not being thrown out into the streets. So it depends on where you are in the financial markets. Whenever there's a correction, there's always, job losses in the financial sector, but no one really cries for investment bankers or traders, or no one really weeps for that.